Hey everybody, welcome to Trading Capital's exclusive analysis. Today is currently November 29th, almost ending off the month here, and it was a little bit of a down day for the indices. We're going to be discussing the SPY, SPX, the QQQ, the NASDAQ, and then the Russell 2000 index, and along with what the yields are doing. So first things first, you can see the SPX made a new little nominal high today. It peaked all the way to about 45.8764 at the high, and then reversed and basically closed at the low of the session. What's interesting about this candle is that you made that new nominal high and then you basically got rejected and closed back inside of this sideways consolidation. So one thing I'm watching for is how we end this week. We obviously have PCE data. You have a potential breakout trying to form on the weekly, but you can see this down sloping trend line is currently keeping price action in check. I'm still in the camp that with a 4-week rally to the upside, you're going to need to digest this move and are likely to see some lower price action ahead. The volume T on the SPX was above average, so that's certainly decent sell side pressure. It was a little bit lighter on the SPY ETF. If we look at the SPY, you can clearly see it also made that little bit of a new nominal high, but it also ended up closing at the low of the session. So a gap up this morning, that was faded. Now, the importance of this price action and looking at why the S&P closed negative, why the NASDAQ closed negative, and why the Russell closed positive. So if we look at the Russell, the IWM. The IWM was actually the strongest indice today, and basically that ended up getting rejected at kind of this double top high wick pivot. The volume was a little bit lighter than usual, so it really doesn't signify that much of a potential turning point, but we are getting rejected at this same trend line that has kept us in check quite a few times. This is more of a weekly chart level. So if you look at it on the weekly chart, you can clearly see you have your pivot, pivot lows over here, rejection here, big breakdown. Now you're simply doing a retrace, and believe it or not, the Russell 2000 still suggests that there is some more downside in this indice. Notice this daily reversal candle. That's not a candle of strength. That is a little bit of weakness that could creep in and push this indice lower. Obviously, we do have that inverted head and shoulders triggered on the Russell, but we've never gotten a retrace back down to the breakout neckline. This would be a retrace if we were to retrace back down to that area. And then what's also interesting, if you look at the technical level that we hit today, if you simply throw on the daily 200 moving average, look at that. Just like it pierced it here, it got rejected. It also pierced it here and got rejected yet again. So that same technical level is seeing sellers emerge, which you have to obviously be cautious with if you're looking to go long and buy this indice on a potential breakout. Now, discussing the QQQ being weak today, the SPY, but the Russell being strong. So small caps were strong, and that's very, very interesting because, again, we saw the yields close negative. So you had the 10-year yield down, you had the 20-year yield down, you had the 2-year yield down, and you also had the dollar down. So typically we've been in an environment, if you look at the QQQ, the Qs have actually been in full-fledged rally mode every single time the yields have started to cool off. So why did the Qs get rejected at this high, even though you had a weaker dollar and a weaker interest rate environment? If you look at the 10-year yield today, oops, let me just retype that in here, US 10Y. So again, we might be at a little bit of an inflection point in the market. Typically when yields soften up, you usually see tech screaming higher and faster. That's not what we saw today. Despite yields being soft and weak and actually closing down, making new lows on the daily chart, tech did not get the bounce. The markets actually closed negative. So perhaps the bond market is slowly starting to creep in and give that inflationary signal. You still have a falling wedge pattern on the 10-year yield that looks like it's kind of breaking down here, but PCE tomorrow could spike yields and cause it to break out. But if this becomes a failed wedge pattern, and you can clearly see we had a little one over here, which is failing, but you can simply draw your trend lines a little bit differently to create yet again another wedge. But you can clearly see we got that breakdown in the wedge pattern, and now you're looking to confirm, as of this candle, this new daily candle, a break outside this wedge. A break outside this wedge pattern is not going to signal, I believe, strength in the economy. I think the reason why yields are starting to fall sharper now is because you're getting some long-term capital starting to park their money in those risk-free returns, so to speak, i.e. bonds. due to perhaps that the recession or the economy is starting to falter. Now, where are we trading on the 10-year yield? You're into a whole host of support. You have these pivots back in 2022, this pivot back in November, this consolidation point, this low pivot here. So this is a big spot for yields. Even if you look on the weekly chart, basically, let's throw up some moving averages to see if we're retracing to anything on the weekly chart. So I'm just going to throw on the 20, which you can see we've pierced that level. If we throw on the 50, the 50 is a little bit lower. So you really don't have that much more support up until we fall down to the 50, or you hit these pivots here, call it around 4.1%. Now, I'm in the camp that off of this daily chart level, you should see a little bit of an uptick in yields, unless there's some sort of regional banking issue that's creeping into the market and the bond market is just signaling. But we have a little bit of a negative divergence where yields, again, have been falling, but the QQQ hasn't really been making new highs and holding and truly getting that breakout. So again, a little bit of a divergence there, with tech starting to potentially show a little bit of weakness off of this huge extension move. But you have to start favoring that, okay, tech is likely priced in the fall in yields, and now it's maybe starting to reposition itself according to potentially changing dynamics in the overall economy. But fascinating price action. There's going to be a lot of trade setups ahead. Please give this video a like down below. Definitely check out my Trading Capital Discord at tradingcapital.ca, where I have a swing trading and day trading service. And I will just post that Discord in the little bit of a text chat bot right over here. So www.tradingcapital.ca. We will be running a little bit of a promotion soon enough, but definitely check out tradingcapital.ca, where you can have access to my direct live trade alerts, my daily analysis videos. This is just a little bit of a free sample going over the major indices. There's a lot more meaningful things that I'm going to dive into discussing in the next video with my members. So definitely stay tuned. You won't want to miss the price action that we unfold as we progress through these potential December Christmas period Santa Claus rally. Maybe not. Time will certainly tell. Take care, everybody. I'll see you on the charts a bit later.